Welcome to the MUFG Global Markets FX Week Ahead podcast with Lee Hardman, Senior Currency Analyst at MUFG. It's Friday, 15th September 2023, and joining Lee to pose some questions on the financial market themes for the week ahead is Andrea Hayward, Vice President of the Japanese Client Sales Group for EMEA in London. The following podcast is intended for professional investors and eligible counterparties only, and not for retail clients. Any content should not be regarded as an offer to conduct investment business or an investment recommendation, but for information purposes only.
Hi, Lee.
Hi, Andrea.
Good to be able to speak to you again. We've had a fair bit of activity in the FX market this week. We've seen a few policy announcements and some fresh data. And there's been a lot of volatility in the dollars, but also from other currencies too. So what's been driving the market recently?
Yeah, Andrea, like you say, it's been an interesting week for the FX market, in particular the dollar, where at the start of the week we had a setback for the dollar where it sold off. And that was mainly driven by pushback that we received from policymakers over in China and Japan against the weakness that they're seeing in their own domestic currencies, with dollar yen moving closer to the highs from late last year and dollar CNY haven't already broken above last year's highs. So we saw obviously comments from Governor Ueda from the BoJ in the press at the start of the week. And he was indicating that wage conditions could be justifiably strong enough for them to think about tightening monetary policy towards the end of this year or / early next year. And one option he highlighted to tighten policy would be to raise rates. So that certainly has brought the prospect of higher rates in Japan into greater focus. And we thought initially that was intended to try and provide more support for the yen, the timing of those comments from Ueda. Although obviously today we've just had a Bloomberg report, which seems to be trying to downplay the importance of those comments, saying that the market is kind of the view or interpretation by market participants is somewhat different to officials at the BoJ who don't see much of a change in the comments from Ueda. So I think really market obviously is going to be watching very closely now next week ahead of the BoJ meeting to see whether Ueda tries to firm up those comments or if he tries to kind of water down those comments further. That's obviously going to be crucial for future yen performance. The other factor as well, why we've seen the dollar bounce back towards the end of this week, is also we had the ECB policy meeting yesterday, and while the ECB surprised and hiked rates again by 25 basis points, I think the main market focus really and the kind of main reason we had a dovish market reaction were the updated forward guidance from the ECB, which gave a stronger signal that rates are close to a peak and then likely to remain at a kind of plateau at these higher levels for longer. And then on top of that, obviously the economic projections as well from the ECB staff showed a significant downward revision to the growth forecasts, which over time are expected to also bring down inflation further out. So all in all, it's made the market more confident that the ECB potentially could be cutting rates next year, and that's pulled down yields in Europe and pulled the euro to some fresh lows against the dollar. And then we also have to look as well again at what's happening on the US side of things. And there we've also seen, again, more stronger data releases from the US this week. Upside surprises both for CPI and PPI this week, and also the retail sales data as well for August, which has given market participants more confidence that growth is picking up in the third quarter over in the US. So that kind of widening divergence story in terms of growth, where US growth is picking up and is weakening in the Europe and in China, that's certainly being helping to support a stronger dollar. But on that side of things, we have seen some tentative signs of improvement, at least in the Chinese data released today, where we saw retail sales and industrial production bounce back in August, which is an encouraging sign, maybe the first signal there that the policy stimulus steps that the government's put in place recently are helping to provide more support for growth in China. Although we do still see weakness continuing in the property sector there, so maybe still too early to see any effect yet from the recent measures to try and boost demand in the housing market over in China. So really, I think summing that all up, I guess the reality is that, yes, we did see a bit of a setback for the dollar at the start of the week, but that proved to be fairly short-lived. And as we speak, the dollar is still on track to extend its advance for the 9th consecutive week.
Okay, so we've got more central bank meetings coming up over the coming week. So what announcements can we expect in policy from those meetings? And what do you think the markets will be looking for and reacting to FX-wise?
Yeah, next week certainly looks like it's going to be a busy week again for central bank updates and potentially a volatile week for FX markets as well. So we've got 3 main central banks meeting in the week ahead. First up in terms of coverage today will be obviously the Bank of England meeting, and on that side of things, we think they'll deliver another 25 basis point hike, lifting the policy rates up to 5.5%. That's our view. Obviously, there is still some kind of risk that those market expectations could alter at the last minute, because we have the August CPI report released just before next week's Bank of England meeting. So if there was to be a significant surprise in that CPI report, that could certainly alter last minute expectations going into the meeting. Our own view, though, is that even if they do 25 basis point hike next week, looking at recent comments from Bank of England officials, Governor Bailey and Chief Economist Pill, we're expecting the Bank of England next week to signal that the Bank of England is moving closer to the end of their hiking cycle, similar to the message we had this week from the ECB. And like the euro, this could trigger a further sell-off for the pound next week. So in response, we're adding a trade recommendation to short the pound against the Canadian dollar heading into next week. Moving on to the BoJ and the Fed, for both of those central banks, we're not expecting any change in policy next week, but the updated policy guidance could still impact FX performance. Like we mentioned before, BoJ Governor Hayward is under pressure to back up his comments from the start of this week when he was talking up the possibility of bringing forward plans to hike rates potentially into early next year. If we see any kind of watering down of those comments from Governor Hayward at next week's policy meeting, that would leave the yen vulnerable to a further sell-off. We've already seen dollar yen move back up towards the 148 level, and if he does water down those comments next week, we could quite easily see dollar yen moving up closer towards the 150 level, and then that would put the onus more back on the government to potentially look at intervening to support the yen if the yen weakness started to accelerate. And then finally, we have the Fed meeting as well next week, which is always important for the dollar and broader FX market performance. Like I said, we don't think the Fed will hike next week, and that we think now that rates are already on hold at the Fed. So again, the main focus is going to be the updated economic projections and their forecasts for the Fed policy rate. In terms of the economic projections, we think it looks very, very likely, certain almost, that they're going to be revising up their growth forecast for this year. Back in June, they were forecasting growth of just 1%, which looks like it might come in at almost double that amount for this year now. So sizable upward revision likely to growth for this year. While on the other hand, we've also seen inflation come down more quickly than expected this year in the US. So we would anticipate that the core inflation forecasts could show a downward revision as well. I think for the dollar, how the dollar reacts to the Fed meeting is, to us, it's not clear cut. Like I say, the market isn't expecting any further hikes from the Fed. So I don't think it would be a big disappointment if the Fed scrapped their plans for one further hike later this year. Obviously, if they took that hike out of the dot plot, could initially trigger some dollar selling next week. But like I say, the market is already kind of priced for really no further hikes from the Fed going forward. And ultimately, I still think that this upward dollar momentum that's in place, that can continue. It may be supported by the upward revision to the Fed's growth forecast next week.
Great. Thanks very much, Lee. So it looks like we've got another busy week ahead of us.
Great. Thanks, Andrea.
Thank you for listening to this MUFG Global Markets podcast. Rate, review, and subscribe, and contact your MUFG sales rep for more information. Come back next week for more insights from the Global Markets Research team.